Tired of paying off someone else's mortgage? Want your own space that you can make your own? Well, in this video, I'm discussing the pros and the cons of buying a house versus renting a house, so stay tuned. What is happening, everybody? This is Austin Weiss. I'm your go-to resource for simplifying the real estate process here in the Chicagoland area. If you haven't already, make sure to smash that subscribe button and tap that bell so you do not miss out on any of my future videos. Okay, today's gonna be everything you need to know about determining whether or not you should buy a house versus renting a house. So without any further ado, now, if you are planning to purchase with the intention to sell within a few years, I'll just be completely transparent with you. It most likely makes more sense to rent. You don't have to be burdened with the transaction costs of buying and selling real estate, along with the home maintenance cost that comes with home ownership. Keep in mind, everybody's situation is different, so if you are planning on purchasing with the intention of selling in a few years, just give me a call. We'll run the numbers. We'll figure out if buying or renting makes more sense for you. I do have quite a few people that have bought a starter home here in the Chicagoland area with the intention of buying something bigger within a few years. That gives them the chance to save up some equity, kind of determine where they want to live, and then it's just a better experience for them when they do buy that forever home. Some things to consider when finding out whether or not you want to buy or rent is, what is your budget? You know, monthly budget. How much do you want to spend? Do you want stability versus flexibility? How long do you plan on being in the property? Also, can you afford to be responsible for any home repairs or maintenance? What are your personal financial, career, and family goals? Affordable and safe housing options within a reasonable commute time for your work? And do you want to live near shopping, recreation, good schools, or other amenities? And then figure out what the upfront costs of renting versus buying in your particular area are. Now, before we dive into some of the financial aspects of buying versus renting, let's go over some of the surface level conveniences of owning and renting. All right, so the first convenience of buying is that there's no landlords. I mean, there's no crazy property managers telling you what you can and cannot do, freaking out that the rent is one day late. You need to pick up all the toys out of the yard and just kind of telling you what to do and what you can't do. So, when you enter into a lease with a landlord, it's like signing a business agreement. So make sure that you're not only checking out the property, but you're also interviewing that landlord to make sure that it's going to be a mutually beneficial business relationship between the both of you. Now, when you buy, you can customize the property however you want. It's the ultimate freedom. You can do whatever you want. You can paint the walls purple. You can put in that cheetah print carpet. You can swap out the staircase for the slide. I'm waiting for the day I can do that. But yeah, you can do whatever you want. Now, when you rent, you have to ask for permission from your landlord to swap out something simple as a light fixture or paint the walls. And they're most likely going to say no. They're going to want to keep that property as neutral as possible. So when you're buying, you can customize the home and pretty much do whatever you want to your own house. The next convenience of buying is there's just way more stability in home ownership. Nobody's ever looking to evict you unless, of course, you don't pay your mortgage. But you never have to worry about change of ownership, potential buyers walking through your space and your stuff for that matter. I mean, unless you're in a rent-controlled area, if you're month to month on your lease, you pretty much can be evicted or kicked out of your property at any point. In addition to that, if you're month to month, your landlord can raise your rents at any time. So there's no protection for you as a renter unless you have a long-term lease agreement. Now, with home ownership, your rent will never, ever increase. You are locked into a rate from day one to year 30. So month to month to month, you will be spending the exact same amount on your monthly payment. Just knowing that should be a huge sigh of relief for yourself. In addition, if you choose to pay off your mortgage quicker by paying more every month or paying an additional payment every year, you will literally shave years off your mortgage. Now, the only thing that really increases with homeownership is the property tax, which will go up about 1% to 2% a year depending on which area you live in. Homeowners insurance will increase in proportion with inflation. In addition, once you pay off your 30-year loan or your 15-year loan or whatever it is, you're basically living rent-free. All you have to do is pay the homeowner's insurance and the tax. And then you can also borrow against your equity in your house to buy that fancy boat you wanted, buy additional properties, or pretty much do whatever you want. A few of the conveniences of renting include the opportunity cost of capital. Having money tied up in a property means you have less possibility of investing that somewhere at a potentially higher return. So when you rent, you don't have to put that down payment lump sum on a property. you can just rent, pay your monthly rental payment, and then invest, whatever money you have left over somewhere else. There's gonna be no maintenance or repair costs. So you just call up your landlord, they come, fix it, whatever's wrong with the property, they pay out of pocket. You don't ever have to worry about any repairs on the property that you're living in. With home ownership, I would recommend saving at least 1% every year against the value of your property for repairs and maintenance. Now, some years it will be $0, and some years it could be, quite a bit if you're doing siding, roofing, windows, systems, things like that. Hey, real quick, if you haven't already, make sure to hit that like button and subscribe so I can reach out to more people looking for awesome real estate advice just like you are. With renting, there's way fewer upfront costs. You pretty much have your down deposit, maybe an elevator deposit, and a pet rental fee, and that's about it. With home ownership, I don't think people understand there's way more upfront costs, such as your down payment, your home inspection. You're gonna have lender and attorney fees, title fees, transfer tax stamps, property tax, utilities, and obviously a homeowner's insurance. So with renting, you're gonna avoid all that, and it's gonna be way less upfront. All right, now that we've covered some of the basic differences between buying and selling, let's cover the important stuff, the financial aspects of buying versus renting. So money management, when you buy a property, you're paying down your own mortgage. When you're renting, you're paying down someone else's mortgage. So it's forced savings. I mean, you have to save up every single month to afford your mortgage, and you need to save up for your down payment. So it's like the adult version of a piggy bank, except you live in it, eat in it, sleep in it, play in it, and basically do whatever you want in it. Now, I think this is a great thing to have because the average person really isn't that great with money, and this forces them to save for the mortgage, where in alternative, they wouldn't be saving anything at all. So I do believe in this situation, having a mortgage will help you build some wealth. Now, let's talk a little bit about appreciation. When you go to buy a property, your property will most likely appreciate over time. Now, that depends on what area you're buying in and what type of property, because not every property is created equal. So it's kind of like magic-free money. You buy the property, you live in it, you use it, and you sleep in it. And then someday in the future, it's worth way more than what you paid for it. There are some areas of Chicagoland appreciating 5+% every year. That means if you own a $500,000 property, year over year, by this time next year, it'll be worth $525,000. Pretty great, huh? Let's talk about leveraging your money. So let's say you buy a $500,000 property, you choose to put 10% down or $50,000 in monetary terms, and you borrow $450,000 from the bank. So year over year, that same 5% appreciation rate, the property is now worth $525,000. But wait, you only put down $50,000 in capital, you borrowed $450,000 from the bank. So your rate of return is 50% because you made $25,000 on your initial $50,000 investment. Tell me where you can do that in the stock market or with cryptocurrency. Now, with home ownership, there are several tax advantages. Depending on how you file your taxes, you can write off some of your interest payments on your mortgage, as well as your property tax. So make sure you reach out to your accountant before the tax deadline to check what you qualify for. For rental properties, if you're a landlord or a property investor, you can write off all your interest, mortgage payments, and all of your property tax. There's no limit whatsoever, which is another incentive to own property. As far as tax-free profits for your personal residence, let's say you go to sell your property at some point in the future, there will be no capital gains tax on your sale of your property up to $250,000 for an individual and $500,000 for a couple, as long as you've lived in your property 2 out of the last 5 years. Now, again, I don't see that happening with the sale of stock or cryptocurrency. You get nailed with capital gains tax when you go to sell that someday. More incentive to own property. Now, the last financial advantage of buying is that you can borrow against the equity that you've accumulated in your property over time. So it's either a cash out refinance, or you can use what's called a home equity line of credit or a HELOC. So basically, you've built up equity through each of your mortgage payments over time, and after a few years, you have quite a bit of savings in your house. So you can borrow against that savings or equity in order to do other fun things in your life, such as buy that yacht you have always wanted, pay off someone's tuition, and basically do whatever you want. The best part about utilizing this strategy is that you won't have to pay any taxes because you're borrowing against your own asset. And if you're like me, I'm a fan of not paying taxes if I don't have to. But hey, that's just a little bit about buying versus renting. If you have any additional questions about what you should do, you're always welcome to reach out to me by phone, text, email. I'm pretty much available days, nights, weekends. Whenever you want to reach out, I can make myself available too. But hey, if you like this video, make sure to give me a thumbs up, tap that subscribe button, and until next time, I'll catch you guys later.